All right, let us continue with calculating the cash receipt. So we just finished with until this part. So I show you how I'm doing this. Okay, so we have done this part. So this is 30% times with this, and this is the remaining. So it means the sales minus with the cash receipt on December. So you will get how much is the cash receipt that you will get in January. So basically, these rules applicable to all months. So when you use Excel, you can just track like this. Okay. So if you can see that, so on December it's 30% times with December. On January, here also 30% times January sales. On March, it's also 30% times February sales. And on April, it is 30% times with March sales. Okay, so same goes to here. So I just drag it like this. So you can see that on February, on February, December minus January, so you will get the remaining. So applicable to all. So then now, because the question asks you only January up to April, so I just sum up the amount from January to April. Okay, so this is the total cash received for each of the month. So basically, so this is the total cash. Okay, so this is the total cash received that you need to take part lah. Okay. Mm. Let me keep bigger so that you can see what is the highlighted. Okay, so let us go back to the slide. Okay, so it is shown here. It is shown. Um, okay, so it is like this. 30%. So this 18,600 comes from 30% times 62,000. So you will get 18,600, and the remaining will be here lah. Okay, so I already explained this part. Okay, so the total collection or the total cash receipt for each of the month is this. Okay, so it's same with the it is same with what we have calculated um, in Excel. All right, so done with cash receipt. So once you finish with cash receipt, then you need to identify how much is the expenses for each of the month. All right. So the expenses we call it as cash disbursement. Okay, so expenses can be credit expenses. Okay, so credit expenses seem like credit sales. So when we talk about credit, the payment will be done later. But when we talk about cash basis, so the moment you do the transaction, you have to pay on time. So this is what we talk about cash planning. So when talk about cash, the cash in and the cash out will happen on time. Okay, so the first one that you have to bear in mind about the cash disbursement about the purchases. So what is the purchases? Purchases is the things is your cost of goods sold. Okay, what is the material that you use to buy your material so that you can sell back the product. All right, so this is the information given to you regarding the purchases. So Selco attempts to pace its purchases with its forecasted sales. So purchases equal to 60% of the next month anticipated sales. So it means that to this in this month, the purchases of this month is equal to 60% of the following month. So you have to calculate lah how much is the purchases. So the payment of the purchases will be made in the months following the purchases. So basically, this month you do the purchases, so the payment of these purchases will happen in the following month. So basically, you have to understand what the question want to tell you. Okay. So if January sales are estimated at 60,000, thus the December purchase are equal to 60,000 times 60. So December purchases equal to 36,000 ringgit, and it will be paid in January. You see the story? So you really have to understand the story, how the payment, how the purchases is being conducted, how the purchases will incur, and when is the payment will incur. So you have to really understand the statement. You really need to understand the story given to you, when the payment happen, when the purchases will happen. Okay, so if the purchases is a cash purchases, so basically the in the month, so the cash will be dispersed in the same month of purchases. Okay. Okay, so other than purchases, there are also another expenses incurred for the business. So example of the expenses are wages and salaries, rent and other expenses. So these are the expenses that will incur for each of the months. Okay, so this is the additional information. So this is the additional information which falls under the purchases also. So we go through this letter. So let us do the disbursement for the purchases first. So before we want to calculate the disbursement, so you have to know the purchases first. So let us calculate about the purchases. Purchases, so it tells you that purchases is equal to 60% of the following month. So you have to calculate first lah. 0.6 times with the following month. So basically November purchases will equal to 60% of December sales. So this is the purchases for November. So we have to calculate for all lah. Okay, no, not for April. Okay, not for April, because in April we don't have the purchases. Sekejap Alright. Sorry for the disturbance. Okay, so for purchases, so if you can see, so this is the December. So this is comes from January. So this is comes from February. So the question tells you that these purchases, the payment of these purchases will happen in the following month. And now you start with the disbursement. So disbursement, so the first one is purchases. So the purchases, all the purchases will be done in the following month. So the total of November, the total purchases of November will be paid all in December. So all purchases happen in December, or will be paid in January. So continue to the following month lah. So I just put it like this so that you can see. So if you can see that purchases on apa nama? So the payment for the purchases in April, sorry, the payment, betul. The payment, so in March, the purchases on March will be done. All the amount will be paid in April. Okay. Uh, because sometimes the purchases also can be like sales. For it can tells you example, it can tells you that 40% of the purchases will be paid first month of the following month, and the remaining will be paid in two following month. So basically you have to calculate it one by one lah. So for example 40% in the first following month, so you have to calculate it like this. Is this as an example tau. And remaining will be paid in the two following months. So the remaining is 0.6 times with uh, so it's like this. So this is purchases. So it also can happen like this. It also can happen like this. Okay, so the example given to you in this slide is just a simple example, but you have to expect that your question will be harder than this example. So I'm just telling you the example. So the first, so continue with the disbursement. So the first disbursement is purchases. Second, let us go back to the. So the second expenses is wages and salaries. Wages and salaries. Okay. Next is rent and other expenses. So you just copy paste from the other expenses. You just copy paste from the question. Expenses. Wages and salaries. Rent is 3,000 ringgit. Applicable to all months. And other expenses. So these are the other expenses. So these wages, rent, and other expenses are same as question. Okay. So let us go back to the question, which is under the additional information. Okay, let us look at the additional information. So in the additional information, it tells you that the Selco need to pay 4,000 interest on long-term debt in January in 2004. So in January, there is a 4,000 interest that the company need to pay. Alright, next is principal amount of short-term borrowing amounting 8,000 and its interest amounting 200 ringgit. $200 will be due in March 2004. So in March, there is an interest of 200 and also borrowing of 8,000. So next is tax payment will also be due in March. So in March also there is tax payment of 5,200, and Selco need to purchase an equipment costing 10,000 in January. So in January there is a equipment purchases. So it is like this. So you can see that there is it's like this lah. Okay, let us do in Excel. Okay, let us continue. Other addition in the additional there is an interest. There is payment. Interest payment. So interest payment will happen in January 4,000. Okay. So interest on January and also in March. There is an interest payment on January and March. In January also there is an equipment that the company need to buy. So the cost is 10,000. So in March also there is an interest of 2,000 ringgit and tax payment. So tax payment also due in March. So tax it is due in March for 102,000. And so that is and also loan repayment. So it is short-term borrowing. So short-term borrowing is on it is also due on in March. It is also due in March. So the short-term borrowing, the amount is 8,000. So the rest no amount lah. So we done with tax, interest, done with interest, equipment, tax due in March, and also short-term borrowing also due in March. And what else? 200,000 for two. Okay, done. Okay, so that's all. So, all right. So that's all for the cash disbursement. So, whenever you finish with finding any disbursement, so you just calculate the amount of the disbursement. Okay, so this is the total disbursement. Total disbursement. Okay. Okay, now once you get the total disbursement, then the third element in the cash planning is the net cash. Okay, let us go back to the slide. Okay, so once you get the total cash receipt and also total cash disbursement, then you can find the net cash of the net cash, ataupun nama dia ialah net monthly change. Okay, ataupun namanya ialah net monthly change. So what is a net monthly change? Is a cash receipt minus cash received minus with cash disbursement. So this minus with this. So there you will get the net cash disbursement. So here you can see that in the net cash, so you can see that in January there is a positive cash flow. In February there is a negative cash flow. March negative cash flow, but then in April it get back to positive cash inflow. So when you do cash budgeting, so this is the important things lah. You get the uh, you know when your company will, when your business will have cash inflow positive or the cash inflow is negative. So then the fourth one, you do the cash reconciliation. So before you do the cash reconciliation, you need to go back to the question and see is there any information needed. Okay. Okay, now you get the net monthly change. So let us go to here. Let us go here. Okay, additional information tells you that Selco currently has a cash balance of 10,000 ringgit, and it will continue to maintain a minimum of 10,000 dollar minimum as a cash balance in the near future. So additional borrowing is allowed to maintain the minimum cash balance. So interest on short-term fund is 12% per annum or 1% per annum. So this is also the important part that you have to take into your consideration, which if the interest given to you, if the interest on the borrowings given to you is per annum, you have to convert it into per monthly. Okay, so how you convert it into monthly? You just divide by 12. So if it is per annum, it's 12%. So when it is per month, it is 1%. Okay, so interest will be paid in the following month after the fund was borrowed. So if the fund borrowed in November, for example, so the interest will be paid on December. So it will continue like that. Okay, I want to show you this. So the the cash reconciliation, so you need to plus with the beginning balance, then you need to minus with the interest if there is any interest on the short-term borrowing, and then you will get the cash balance. So if there is negative amount, so then you need to do the financing. Okay, if there is any financing needed. Let us go back to Excel. So when you want to do the cash reconciliation, it will start with plus with the beginning. We need to add with the beginning balance. If there is any beginning balance. So beginning balance, it tells you that the beginning balance in December is. In December, there is a beginning balance of 10,000 ringgit. Then you have to minus with interest. So there is no interest payment. So therefore, in January, it is 0. Okay. So then you will get the amount. So 10,000 minus 0, it is still 10,000. Okay. So if there is, sorry, it's not 10,000, it is 10,400, because 10,000 plus with the net cash. So net cash plus with the beginning balance minus with interest. So it is here like this. So it's no need to. So it's like this. This plus this and minus this. Okay. So I show you. This comes from this minus this, this plus this minus this. Okay, so then you will get the amount. So the cash balance before financing. So here is, you will get the cash balance before financing. Then after that, uh, you need to identify whether there is a financing needed or not. How you can identify if there is any financing needed? If you see that the ending balance, if the ending balance, in this ending balance, you have to make sure that the balance must be more than 10,000. The company must ensure that the balance must cannot be less than 10,000 ringgit. Okay, so now the cash balance before financing is already more than 10,000 ringgit. Therefore, there is no financing needed. Therefore, the ending balance is 10,000. Sorry, the ending balance is still 10,400 ringgit. Okay. So when there is no financing needed, so the cumulative borrowing is 0. So the last part here is cumulative borrowing. What is the cumulative borrowing means? It means that uh, cum- cumulative borrowing means that if there is any borrowing, so you have to add for each of the borrowing happened in each of month. Okay, then now you have to continue with the month of February. So in the month of February, where is the beginning balance of the February? Comes from the ending balance of February. So it equal to the ending balance of February. Okay, so all right. So is there any interest? No interest because you not do any borrowing in the previous month. So therefore, there is no interest in this month, in the month of February. So what is the cash balance before financing? So it is like this, eh? So negative 3,000 plus 10,400 minus 0. So the answer is 6,900. So is there any financing needed? Yes, because the ending balance must equal to 10,000. So how you identify the 10,000 ringgit? Sorry, how you identify the financing needed? It is 10,000 minus, it is 10,000, sorry, you cannot do like this. It is 10,000 minus 6,900. So it equal to 300. So 3,100. So the cumulative borrowing for this for this month, for February, is 3,100. Okay, so now because of that is 3,100 borrowing in this month, so you have to calculate for the interest in the following month. So the borrowing incurred in February, so the interest payment will be incurred in March. So how much is the interest payment? It is 1% times with 300, 3,100. So it is 31, 31 ringgit. Okay. So now this so the cash balance before financing is less than 10,000 ringgit. Therefore, you still need to come up with another financing because you still need to maintain the 10,000 ringgit. Okay, so because of you need to maintain the 10,000 ringgit, then add another you need to add another financing. You need to add another borrowing. So how much is the borrowing? It is 10,000 minus 1,369. So the borrowings needed in March is 8631. Okay, so how much is the cumulative borrowing? So it comes from the last month plus with this month borrowing. So the next month, the interest of the next month, is 11,731 ringgit. So in the following month, the interest that you need to pay is 117.31. Why 117.31? Because the previous cumulative borrowing is 11,631. So 11,731 times with 1%. So the following month, the interest that you need to pay is this much. Okay, so now you need to identify whether is there any financing needed. No, because the cash balance is already more than 10,000 ringgit. So the company need to continue with 10,000 ringgit balance. The cash balance, the company need to maintain the 10,000 ringgit balance. However, in this month, the sales is already more than the company able to to pay back all the financing. So therefore, they just minus with the they just minus with this. Okay, so it is like this. So what is the ending balance? It is, so it is this one minus this, so you will get the ending balance. So no more, no more borrowing in this month. So in April, all the borrowing are settled. Okay, so basically the answer here is, so this is the ending balance in April. Okay, because all the payment, because all the payment for the short-term borrowing have been settled in April. So that's why the financing needed is negative, because the company pay instead of the company getting the amount. So but in the financing needed, it when it is negative, it means that there is a cash outflow from the company. Okay, so that's all for financial planning. Basically, financial planning will tells you what is the cash budgeting. Okay, I'm sorry for the disturbance in the office because they don't know I'm doing the class, and also I don't have a place to do the class. So I hope you can focus on my teaching on the financial planning. All right, so that's all. Thank you.